So putting together the understanding of what the markets are doing. So you've understood which markets correlate with which, inverse or sympathetic, and what's the current state of that relationship, because these relationships are not fixed. So once you've done those things, and you don't have to do this constantly. I mean, this is something you could probably keep a pretty good track on, day to day. I don't think it's necessarily something you need to constantly keep an eye on. But what are good times to check for these changes in relationship? After central bank decisions, after significant news releases, things like that are good times to see if the correlation is still there. All right, so now what do you do with this? Once you understand what the nature of the relationship is, the strength of it, and the current correlation, really what happens is the dollar primarily, and I'm going to stick with the dollar because it is the most important market pulse chart. If I've got strength in the dollar breaking up the resistance, it's very likely that I've got weakness in the euro US dollar breaking down through support, that I've got strength in the Swissy breaking up through resistance. What about the cable? The cable should move sympathetically with the dollar too. Again, check the correlation, but the cable should be moving inverse to the US dollar, sympathetically with the euro US dollar. So, for example, when we turned over and broke through the support of the wave, this turnover represents a huge shift, not only in the direction of the market, but it's a break of the old trend. It was a huge, huge shift. We had this wonderful uptrend. Well, wonderful if you were a dollar bull. I mean, I could care less. That shifted into more of a neutralish trend until finally we turned over and we had what we have now, which is the very beginning, the very, very early stages of a downtrend. Now, why do I say very early stages? Because some of you might be saying, well, Raghi, this thing fell from 85 to 78. That's a seven-figure move. How can you say early stages? Well, I say early stages because it is an early stage, not because just price dropped out of bed, but because we've only turned over on the actual market cycle of the wave relatively recently. So 12 to 2, 2 to 4. Now we have a 4 to 6. And that 4 to 6 in terms of how long it's been moving downward is a relatively transitional move compared to the uptrend that we were looking at for almost, 3 months? Half of October, all of half of September, all of October, all of November, and a good part of December. So almost 3 months, right? So this has been moving down for a grand total of about what? Almost 2 weeks, not even. So we haven't tested it yet. We do have the turned over downward angling wave, but we haven't really gone back and tested the resistance, and we're starting to do that right now. Where will this dollar index find resistance? Will it be at a psychological number like 81? Will it be at one of the lazy days lines? Will it be at the bottom line of the wave as resistance? Let's squeeze in some more data here and get all the lazy days lines to plot. Okay, you can see here it could be at any of them. Here's my 987, my 1597 is going to be up here somewhere, but here's the 200 period simple. So now what do I do with this? What do I do with this understanding of the dollar? Well, a bounce right now off the 78 should be sending the euro US dollar back down again. Now, we were expecting the euro US dollar to go back down anyways, weren't we? We don't necessarily need the market pulse to tell us that, because take a look here. That's a big deal right there. That's some downward pressure coming from the 200 period simple. Okay, so with that kind of pressure, I do expect a little bit of ceiling and some weakness regardless of what's happening with the US dollar, isn't it? And it's amazing how often we'll see these types of relationships. So with us bouncing off this 200 period and heading back lower, Could I possibly say that it's the weakness in the euro that's moving the dollar right now? I think I could. I think I'd be very comfortable saying that. Okay. Now, sometimes the secret, the key into understanding which market's moving and why can be from other supporting casts of the market pulse. For example, crude oil continues to tank. I mean, look at this, $34. It's absolutely amazing. Let me give you guys a little bit more of a historical perspective. That's the weekly chart. That's the monthly chart of crude oil. Now, are we coming up on some relatively important areas in crude? Yeah, we're hitting the 200 period simple right now, which is sitting at 35.74. We've broken it really, but the trend on the monthly is freshly down. The trend on the weekly has been down since back on I call it the end of September, beginning of October, right here. That's actually September 29th that I'm pointing to right now. Okay, we know what's happening on the daily. That's a downtrend. It's a very, very established, quite healthy downtrend. We haven't been having too many corrections, but that's the downtrend there. So the strengthening dollar typically gives us a weakening crude, or a weakening crude can help strengthen the dollar. We know the relationship is inverse just between these two, and these are just two market pulse charts. Okay, but let's take a look at the current state of the relationship. The dollar is going to be in red here. All right, what's the current state of the relationship? They were going inverse for a good part of the year, right? And that their typical relationship is inverse. But then the US dollar found resistance at that 88 level, if you guys remember. And we stagnated up here. Because remember, we had just this topping action way up here. You guys remember that? This area right here was where we found resistance on the US dollar. That's the US dollar right there. Okay. Once that happened, I mean, you can see that the crude oil market just didn't care. It just kept right on going down. And now they're kind of both going down. Isn't that unusual? That's not typically what's supposed to happen. So they don't really have the typical correlation right now, do they? Not at all. So these markets are not moving together. Okay, and a lot of times that could offer up some kind of wonky action with the crude oil market and the Canada. That's where our typical crude oil COMDOL relationship to the Canada goes. It should be an inverse relationship. Why? Because the Canadian dollar chart, which compares and contrasts the dollar versus the Canadian dollar, US dollar versus the Canadian dollar, when the market goes up higher, that's the US dollar gaining versus the Canada. And when the market goes down, the dollar Canada, that's the Canadian dollar strengthening over the US. We also know that it could be vice versa. It could be the US dollar weakening versus the Canada. That could still push the market lower. But the bottom line is, we know that the Canadian dollar has a very strong relationship. The loonie itself has a very strong relationship to crude oil. Canada is a huge crude oil producer. They make that shale stuff up there. And so when you take a look at this relationship with crude oil getting hammered, it's no wonder that the Canadian dollar has been heading up higher. But what's happened? Have we lost correlation here too? Well, once again, Canada has really made a triple top up here. Take a peek. Triple top up here. Very similar to what? To the US dollar, right? The crude oil market continues to head down, which would tell you that we would expect that this chart would head up higher, wouldn't it? We would expect that this chart should keep breaking up through that 140 area. I'm sorry, this is the Canadian dollar, so we expect this chart should head up, and this was what, I believe it was, let me double check. Her triple topping was happening around the 3,000 area. The 3,000 area, that's right. Okay, so this was happening around the 3,000 area. All right, So we would expect as the crude oil market marches downward, this would break this 3,000 resistance here. I know it says 140, but that's because the primary chart here is of crude. So as you take a look at the lack of a breakout here, what does that tell you? Well, right now, could it be that the dollar Canada is taking its cues off the dollar index? Take a look. Sure. Because don't forget, the dollar Canada is the US dollar versus the Canadian dollar. And while there's usually a very good relationship between crude and Canada, right now that weakness in the dollar is keeping the dollar from gaining on the Canada and breaking through that 3,000 level. And that's how you put all the pieces together. That's how market pulse and forex analysis works together.